Hey guys, Bill Soriano here from Pittsburgh, and I just recorded the weekly recap using the 4 hour supply and demand zone trading. Right, I just recorded the weekly recap for the week of March 16th, and I figured I'd just make you guys another video, just kind of showing you how I organize, how I look at everything over the weekend here and organize what I'm going to do here. So. Let's see here. So let's go through the pairs. Now, these flags here, if you see a red flag, that means that the 4 hour is bearish. If you see a blue flag, then the 4 hour is bullish. If you see a yellow flag, that means that the 4 hour supplier demand zone was hit. See a green flag, that means that a limit order has been set. Okay. And then if you see a purple flag, that means we have a current trade, which right now the only current trade we have is CADJPY. And actually this odd CAD one is, I'm just going to remove everything from here because that was no longer valid. Okay, so let's just remove that flag there. So you can see there's CAD JPY. Chef JPY was yellow because we were waiting for something on that, but then we determined not to trade that, but I'll show you. And then when there's no flag, that means that the EMAs weren't lining up the way we want them to on the 4 hour time frame, so we're not going to trade that pair this week. Okay, so we're going to go through these now because we need to get them ready for next week, right? So we're going to stay on the 4 hour. You can see here we have the three EMAs here, the DeLorean EMAs. I have them on here twice. Okay, I put them on here twice because I want to have one set where for the 4 hour time frame, and then another set for the 1 hour time frame. Okay, because I need the yellow and the red for the 1 hour, and I need the blue, the gray, and the aqua for the 4 hour. Okay, and it doesn't let you split them up individually. You either have to have them all on or none of them on, right? So that's why I need to put it on here twice. Now, right here we see prices below the 800, but the 50 is above the 200. So that one we don't want to trade, right? Odd Chef, right? We see here the EMAs are in line, right? Prices below. Right away, when you see the EMAs line up like this, AGB from the bottom or from the top, you automatically know you're going to be in good shape. So the indicator gave us this order block right here. So that's where we have our alert set. Okay, we see if we turn the indicator on, we can see that area is still valid there, right? So we have our alert set there. AUDJPY, right? This is also, this is some writing I have here. Let me just move this over here. This is also bearish, and we have our order block still up here, right? AUDNZD. Okay, this one, we could see price is below the 800. So the indicator lines aren't in sequence like AGB, right? But price is below the 800 and the aqua is below the gray. So that makes that bearish. And the indicator is giving us this order block right here. Let me just turn this on. So you can see when they look gray like that, and then there's our alert right there. So let's just go through these quickly. AUDUSD, again, price is below the 800, but the 50 is above the 200. So we don't want to trade them. CADJPY, right? This looks valid. Now you can see here we have a new order block because we got this break of structure. We got this trend continuation here to the downside. Again, even without the EMAs, you could see that this was moving down, right? Now we have this new zone right here, okay, that we could target, okay? So, and again, you see this wick going up into this zone, and you might say, well, that zone's already been hit. That's incorrect because you have to wait for the break of structure. So this zone does not exist here until this price comes down here and breaks structure to the downside. So that does not count as being mitigated. So this zone here is still valid to trade from. Okay. So we're going to put our alert down there, mark up this zone. We're also going to leave that one there as well so that we know we do have a zone right above it. So this could just be a trick for us, right? It could just be enticing us to get into the trade there. Okay, so CAD that's the trade that we currently have going. It's in profit right now. Chef JPY, we decided not to go with this anymore. There was a trade set up here. Price moved into the supply zone, but because of the way it moved up there, it caused the 50-day to cross not 50-day, these are periods. So it caused the 50-period EMA, the aqua line, to cross above the 200 period EMA. And so that invalidates the setup for us right there. So we're just going to shut this off for right now. EURAUD. We could see just by looking, this is very, very bearish. And it's the supply and demand zone it's giving us is all the way down here. So because of the way this price action is, the indicator just sees this as one big move up. These pullbacks here just aren't sufficient enough to be valid pullbacks. So this is just like one big move up, right? And the order block or the demand zone is all the way down here, okay? Now, if price would decide from here to move up and then break structure to the upside here, okay, then we would probably get a demand zone right in here that would be closer to where price is. But right now, because that hasn't happened, we would have to wait for this to come all the way down to here. EURCAD, and a couple of these are like this too, guys. See? Here's our zone down here. It's giving us this this order block right here to trade down from, but we don't want to take this down, right? This is bullish. This 4-hour trend is definitely bullish. And so it's counting this little change of character here as a shift to the downside, and it's giving you a supply zone to trade from. But we're not worried about that because we know that we're just looking to buy this. EURCHF, right? Same thing here. It's just giving you these little areas here, but we're waiting for price to come down to here. It just missed it at 1 a.m. on Thursday morning. And so we need price to get down into that zone. And again, as long as our EMAs here are lined up bullish, we're going to stick with the bullish scenario, and we're going to just ignore any of these order block supply zones that the indicator is giving us. EURGBP. Okay, now this one, price is currently above the 800 and the 50 is above the 200. So again, we're waiting for price to come down to here. We're going to ignore this order block area up here because we're not looking to sell this. We're looking to buy it. Now, as price moves down here to try to get to our area here, it's probably going to drop below the 800. And so that's going to cancel out our buy scenarios. And once the 50 drops below the 200, then if that happens, we're going to probably look to sell this, okay? So that's kind of what this is telling you. When you see these opposite order blocks show up on the indicator here, that's telling you that there's a chance the trend is getting ready to shift, right? EURJPY, same thing here. Price is just above our 800, so we're still looking to buy this. Again, price made a break of structure to the upside. It ran into this supply zone up here, and it reacted down off of it. But again, based on the EMAs here, we're looking to buy, and the indicator gives us a new zone here to trade from because we get this break of structure to the upside. Okay, EOR NZD. This is still very, very bullish, as you can see here. And again, our zone is all the way down here because the indicator just sees this as one move up, right? This is just one move up to the indicator, right? Now, if we would get a break of structure to the upside here, right? Then the indicator would more than likely print a demand zone right around there, and we can wait for price to come back to there to trade from there. But until that would happen, if price just works its way down here to this zone here, and again, we need to make sure that when it gets to this zone, the price stays above the 800 here, right? And the 50 stays above the 200. Because if any of that changes as this comes down here, then our outlook on this pair is going to change. Remember that. Okay, this was EUR USD. This was let's just remove that for now. This is bullish. And again, we have an order block down here. There was an order block right here that got hit and price went through it, but it wasn't a valid trade setup because of risk to reward ratio. Because you see how this order block is right here. So if we would look at take a trade here, let's just say that the indicator told us right here on the 1 hour time frame we could take our trade, right? Well, our stop loss has to go down below here, and our take profit has to go at the beginning of that supply zone. So it doesn't give us at least a 1 to 2 risk to reward ratio. So it's not a valid trade. The reason for that also is because this move here that breaks structure isn't impulsive enough. Look at the last move here. Here's your last order block. Okay. So look at the move. Again, this is like one move from here to here. Okay. And then price corrects downward and it only moves this little bit here and breaks structure. So you want to see a move that's at least half of the prior move. So this just needed to get a little bit further up first. This gets a little bit further up here first, then it can pull back to this zone that was right around here, and it could take off to the upside. Now, there's no zone more there because this change of character went through, this move down below there went through there, and that causes the zone then to disappear. Okay? But if you did a quick replay here, you'll see what I mean. See, there was a zone there. Okay? But then what happens is, when price closes through that zone, it disappears. Both of them disappear, see? So that's kind of what happened. It gave us this zone here because of this break of structure to the upside, but it wasn't a valid zone. So right now, we're waiting for price to come all the way down to here. So let's make sure we have an alert set right here. And, you know, if you would have taken this trade because the indicators did give you that indication, then that's just, you would have lost that one. You would have had a 1% loss. Okay. So had you taken that, remember we had about a 2.2% gain in GBP/AUD. So we may have lost a 1% on this if we would have taken that. But we didn't take that because the risk to reward just wasn't there, because this 4 hour opposite order block supply zone was kind of right on top of the demand zone. So there just wasn't enough room for price to move. GBP/AUD, this was our winning trade from last week. And so you could see here, this was where our zone got hit, reacted off of it, and we took it back up to that high. Now, we can't trade from this zone again. Remember, you only use these zones one time. So we don't have any trade set up right now until this area gets broken. That's why we have an alert set here. So that way we get a close above this alert, and that tells us that we can come to the chart and we can see that we'll have a new supply zone right down here, fairly close to where our old one was, but it'll be a new supply zone because of the break of structure to the upside, and we'll be able to trade from it. But right now we have nothing set there. GBP-CAD, this is bullish. Again, we have this zone here where we have our alert. We also have another zone down here, right? And you can see what those look like. Very important on this zone here, it's using this candle, but because we have this wick coming all the way down, right before that, grabs all that liquidity, we have to use that for our invalidation zone, right? So that's important to remember. GBP-NZD, this one is bullish as well. And our zone is down here. Okay, don't know why we have this alert set up here, right? So this is bullish. Price is above the 800. The 50 is above the 200. So we have a bullish scenario here. However, if price does work its way down here, it's important that the 50 doesn't cross the 200 to the downside, right? GBP-CHF, this one is also bullish. And we have this zone right here to trade from. This zone, though, was already hit. Okay, you can see here, this zone was hit. We had this huge break of structure to the upside, comes back, hits it, reacts off of it. So now we can't trade from this zone again. We have to wait for price to go down to the next zone below it. Or, right, or what could price do? Price could decide to move up, and then we'd have another demand zone here, or price can move down. GBP-JPY, this one is actually bullish right now. So we can put the blue flag on here because price did move above the 800 and it has closed above the 800 here. And the 50 is above the 200. So that gives us this demand zone right here. Again, this wick did touch it, but that was prior to the break of structure. So this demand zone did not exist until this break of structure to the upside. So that touch right there does not count, right? If you can't determine that on your own, right, then all you have to do is, again, hitting the replay button. Just pull this back to here. Okay, you can see here, this is my drawing. The demand zone's down here, right? So there is no demand zone there, right? And you could see that that demand zone does not show up until you get the break of structure to the upside. So that's why that wick mitigating that area does not count as a hit to the zone. This is still a valid zone to trade from. That's GBP-JPY. And this is GBP-USD. Okay, this one here, you can see how you get this break of structure to the upside, and it gives us this zone right here, okay? But what's the problem with that zone, guys? This is where, again, the strategy could be a tad bit subjective. Okay, again, Here's your last zone down here. Look at this impulsive move up to here. Price then reacts downward, and then you get a move up that does just barely break structure, right? So there's the way this candle just barely, I don't even think, guys, sometimes you have to look at that's not even a valid break of structure because you need the body of the candle to close above that wick. So when I look at this, it's not really even that it's somewhat subjective, right? That's just not a zone to me. Okay. So the indicator is giving me that zone, but this zone, I personally would not trade from, right? That would be a no for me, right? But again, that's where this strategy can be a tad bit subjective because that zone is not a valid zone for two reasons. First of all, you did not have a valid break of structure to the upside yet. Okay. You just have wick rejections. Okay. The second reason is you want your move that creates the break of structure. You want that move to be at least half of the prior move. Okay. And you can see the prior move goes from here up to here. This moves down. And so far, you only have this small move. So what do we really need here? What we need here is there's nothing wrong with this chart, but we need price to just go higher, right? We need price to move higher. If price moves higher, then we get a valid break of structure, and then this zone will be valid for us, right? Then we can trade from that zone. Then we can look for price to go back to that zone and then hopefully go to the upside, right? But right now, I wouldn't want to use that zone. I'm going to leave the indicator on right down here. And I think there was another alert that wasn't set here. Oh, it's in replay mode there, so that might be why not letting me set my alert. There we go. Okay, a couple more pairs here to go, guys. NZD USD. Again, as always, you want to be on the 4-hour time frame, right? This price is above the 800, the 50 is above the 200, so we're still bullish here. If you look at the market structure, there's no reason why you would think otherwise, right? I don't know why I have this highlighted here. Let me just take this off of here. So this is our zone right here. If we turn the indicator on, we see that zone is highlighted. We also have a zone up here. So this zone would be used for what? Our goal. If price comes down in here and we're able to take a trade, that would be where we would set our take profit, or that would be our profit target. Okay. And then down below here would be where our stop loss would be. Now here's something important too, guys. Let's say that this would go off. Let's say the price comes down into our 4-hour zone. We drop down to the 1-hour, right? We get change of character. We get a pullback to our 61.8, 71, whatever, and then price shoots to the upside, right? So you have these two zones here. The one was already hit, okay? So you don't want to trade from it, but you have the new one on top of it here, right? See? That's the one zone, and then the other zone starts here and goes to there. Now, when you have this like this, normally you put your invalidation zone or your stop loss below the zone you're trading from. But because they're on top of each other like this, you're going to have to, let's say you get in this trade right here, as price pulls back, right? Instead of using just that first zone, you're going to have to extend that down to this zone here, okay? But again, your profit target would be at this supply zone here, so you'd still have a 1 to 3.08 there, okay? And then the other thing you have to watch sometimes is you have just a little bit of imbalance down here. But is it really imbalanced? Because the candle right before there kind of has it covered. So you don't really know. But keep that in mind. If you're going to set up a trade and you have a zone on top of a prior zone that was hit, you have to extend your invalidation zone down or up, right? Okay, let's look at NZDCHF. Okay, this one, price is below, and that's below. So we're trading from, we have this area right here that the indicator is giving us. Let's make sure that it's still giving it to us. Yes. You can see this area right here, and we have our alert set at the beginning of that area. We also have an area right above it as well. Okay, so we're waiting for price to get up to there. NZDJPY, this one has a yellow flag, which means the point of interest was hit, right? But we weren't able to get a trade to go off here. Okay, but we did set up a trade outline for it. But right now, this would be a trade that we can look at. So I'll set this up to see if this is something we should be looking at for next week. Let me just go back to this. NZD/USD. This now, as you can see, price is below the 800, but the 50 is above the 200. So we're staying away from that pair. USD/CAD. This, we're waiting for price to come down to this area right here, right? Right? This supply zone up here that's printed, we would use that for what? That would be our profit target. If price does move down into here, the EMA stay in line, we drop down to the 1 hour, we get our market shift, price comes back, it's our 61.871 or refined 1 hour zone, takes off to the upside, this would be our profit target right here, right? And again, if you don't have supplier demand zone painted there by the indicator, then you can simply use the highs, right? USD CHF, this one is trending down right now on the 4 hour. So this is our supply zone up here. We're waiting for price to hit. And then these would be our target areas down here. USD JPY, same thing here. This zone was already hit. So when it comes back the second time here, we don't want to trade it. We have our alert set at the next zone up. So price can either get up to there, right? And then we can look to take a trade, or price can come down, break structure to the downside here, and then we'd look to take a sell from up in this area. Okay, guys, that's it. That's just a quick overview of what we're going to look for next week, right? Again, we have all of our pairs flagged. The blue ones are bullish. The red ones are bearish, right? And the yellow ones mean that our 4 hour zone was hit. Green ones mean a limit order was set with our broker on the demo account. Purple ones mean we're in a trade. Again, any questions? This is a free strategy I'm teaching you guys, okay? But it takes time to set it up. You have to put a lot of time into it. You have to be on the charts every day. You have to spend some time on the weekend, setting everything up, all your pairs. Then each day you have to go to the charts, make sure everything's still lined up. You have to, if you get any alerts, you have to take care of them. If you have to set trades up, you have to set trades up. So there's a fair amount of work that's involved in it, but it's a free strategy for you. If you want something that's done for you, then you want to get with me. I'll send you information on how to join the company that we're our community and the company that we all belong to, where you can have live educators with our company. They do live training 5 days a week. That's how I've learned this stuff. That's how I've put together the strategy from what they've taught me. And if you want trade ideas sent right to your phone, then or you want to use our company scanners and our strategies with those scanners, just let me know and I'll send you a link to join. Other than that, guys, let's have a great week.